All right. Joining me is Adrian Fritz, Chief Investment Strategist at 21shares, who currently offers the world's largest suite of crypto ETFs. That includes 9 crypto ETFs here in the US. These cover Bitcoin, Ether, XRP, Solana, Dogecoin, SWI. Plus, they have 2 index-based crypto ETFs. But Adrian himself, he heads up all of the research and commentary that 21shares puts out to the market on crypto. And he's now joining me from Switzerland. Adrian, it is a pleasure to connect. Welcome to the podcast.
Well, thanks a lot for having me. Good to be here.
So I have to ask you, have you been a little bit busier than usual recently with everything going on in crypto? Like, does your workload increase when the market is in the midst of a big drawdown?
I would say yes. I mean, crypto trades 24/7. So is my job. So, of course, it's a lot of work around the year. But yeah, evidently, when prices come down like this, we're having a lot of conversations with investors, with clients, explaining the situation and providing some color what's happening in the market. So absolutely.
Yeah, 24/7 means you never get to sleep.
I basically never sleep, Nate.
So, look, I thought let me start by providing some performance figures from several top crypto assets, all of which 21shares offers ETFs on, as I mentioned at the top, and we'll see where that takes us in the conversation. So I was looking this morning. Since late September, early October, Bitcoin is down over 40%. Ether and XRP are down 55 to 60%. And Solana is down almost 70%. And so start by giving us your big picture take here. Like, what do you think has caused this type of down move across crypto?
Yeah, that's the big question, but I don't think it was necessarily a crypto specific collapse. There's a lot of different factors. What we really saw was a broader macro and liquidity reset. I mean, over the past 6 months, markets really started pricing in, especially tighter financial conditions, meaning higher real yields, a stronger dollar, expensive leverage, and that obviously puts a lot of pressure on, risk on assets, long duration assets, and especially crypto. So macro tightening is one factor. Another one is just rotation. We've seen a lot of capital flow to gold, energy, and defensive stocks, given just the geopolitical tension and what's going on around the globe. And I also think there's a bit of a narrative fatigue. I mean, ETFs launched, expectations were extreme, and I think prices had front run all of that adoption. And on top of that, the market was quite over leveraged. We've seen this on October 10th. So when the sentiment turned in October, you've seen a lot of forced liquidations that accelerated the downside. But overall, I would say this was less about fundamentals deteriorating. It was more about a classic de-risking cycle, especially for a young, volatile asset class like crypto.
I want to ask you about several crypto assets specifically to maybe unpack what you just said a little bit further. And if we look at Bitcoin specifically, I think most listeners of this podcast are very familiar with the digital gold narrative. And I know this is well-trodden territory, but I'm curious how you think about what we've seen from Bitcoin recently, because naysayers continue to say that it looks much more like a technology stock or a pure risk-on asset than some sort of digital gold or safe haven asset. So how would you respond to that?
I would say Bitcoin is both, depending on the time horizon. I think Wall Street a lot of times has the attention span of a goldfish. And for a story like Bitcoin, it really requires to zoom out. But to answer, I would say short term, yes, Bitcoin does trade like a high beta liquidity asset. But in the long run, has the attributes of a monetary asset, like a store of value, like gold. The fixed supply, the global portability, and the independence from governments. So in the long term, it does compete with gold as a store of value.
Yeah, and I also think it's important to zoom out a little bit. I've talked a lot about this. So, as an example, if we look at the ARK 21 shares Bitcoin ETF, ticker ARKB, since that launched in January 2024, it's still up around 50%. Now, you can look at gold. Gold is up around 150% during that time. But then if you were to go back several years before then, gold was underperforming. So I do think clearly the time frame that you're looking at here makes a big difference. Something else I wanted to ask you about with Bitcoin, I was looking at some of your research, and I saw a really interesting data point that you had, which was the aggregated purchase price of Bitcoin, something that you call realized price. And if I remember correctly, that was around 58,000. So this is the aggregated purchase price of Bitcoin. How important is that level? Is there anything? I'm not a big technical, analyst, and so I don't like to get into that. But is that an important threshold, or is that just an interesting data point to have?
I would say it's an important psychological support. And just looking historically, usually it acted as a support line also during the bear market. It can dip below that price, but usually it kind of signaled a bottom. And yeah, for all the technical traders out there, at the moment it coincides with the 200 week moving average. So yeah, if we look at a technical analysis, I would see this as a key support line in the Bitcoin chart.
Okay, so that's Bitcoin. What about some of the other crypto assets? And you can take these separately if you'd like, or you can just offer some thoughts on the group as a whole. But again, if you look at Ether, Solana, XRP, to me, those do seem much more like risk-on assets. So you mentioned Bitcoin maybe having some properties of both. I think with Bitcoin, ultimately, we will see it look much more like digital gold, again, on a longer-term time horizon. But some of these other assets, they do look like tech plays. They're very high beta, however you want to describe them. And I'm not saying that's necessarily a bad thing, but is that how you think investors should look at those types of digital assets outside of Bitcoin?
Yeah, absolutely. I totally agree. Many altcoins really behave more like a venture style risk asset. Of course, within the altcoins, there are differences, different value propositions as well. So a Solana or an Ethereum can really be described as a platform for innovation. And therefore, in a portfolio, it might sit next to tech equities. And then you have a variety of other, altcoins that are much, much smaller, that are much, much earlier in regards to their adoption and their maturity. And here I really see them as a early stage tech venture play.
Okay, so if that's the case, and you mentioned this platform for innovation, which I like, if I'm playing devil's advocate, and I know you see all of this as well, especially if you're out on X or some of these places, one of the narratives that has sprung back up with this recent downturn, and again, this is from crypto naysayers for sure, but the narrative is that there are no tangible use cases for crypto, right? That it's all just speculation, it's gambling. How would you respond to that? And let's maybe put Bitcoin aside. I think we both agree, that maybe that's a little bit of a different asset. But what do you perceive as some of the most important tangible use cases for crypto right now?
Yeah. So first off, I would agree. Unfortunately, the majority of crypto assets and token out there are nonsense, are pure speculation, and don't necessarily have a value proposition in the back end. It is an open source technology, meaning Nate, you and I, we could spin up a token in 2 minutes and launch our own cryptocurrency. Doesn't mean it has a viable business model. It doesn't mean it generates any revenue or it has any value proposition. However, there are a lot of crypto assets and projects that actually do have real use cases and that do generate cash flows, they generate revenue. But investors got to look closely. And I think that's the beauty of 2026. I think the years where you can just throw money into the crypto space and hope everything goes up are over. It's really the year of selections. Where you got to look closely, evaluate how the project works, what's the adoption look like, what's the network growth, and what's the revenue models. To give a few examples, I would say we spoke about Solana and Ethereum. And I would say the three big use cases that are emerging are stablecoins, tokenization, and decentralized finance. Of course, all of these are buzzwords and kind of narratives and trends that Wall Street and traditional finance is very familiar with, because everybody's talking about, for instance, stablecoins and tokenization. But we got to understand that when it comes to stablecoins, they all live on a smart contract platform like Ethereum or Solana. There's almost 300 billion in stable coins, and they live on those blockchains. And when it comes to tokenization, it's the same theme. Over 60% of all tokenized assets trade on the Ethereum blockchain as of today.
So let me ask you this. If we take stable coins or tokenization and we talk about the adoption here, which I agree, you look at all the data, you look at the numbers, it's clearly increasing. I think the next natural question would be, well, then why isn't that helping the price of Ether or the price of Solana or any of the chains that might benefit from that adoption? I think about even yesterday, we saw a pretty big headline around a large asset manager with a tokenized money market fund that's going to be using a decentralized exchange. You look at headlines like that, and you would think that should be very bullish for the prices of some of these underlying assets. But again, that's not what we have seen over the past 6 months or so. Why is that? Why is that not reflected in digital asset prices?
That's a very good question. And I think it comes down to the value capture. Just because activity grows on blockchains doesn't mean the token automatically benefits. I mean, you have supply dynamics like emission of the token, unlocks. You have a lot of fee compression from competition, and you have structural issues around how value accrues to the actual token holders. So what we're seeing is that the usage is growing faster than the token economics are evolving. So the infrastructure is succeeding, but the market is still working out a sustainable valuation model to see how to what value to give to these underlying platforms. There's a thesis called the fat app thesis, because it's being discussed where the actual value is being accrued. Is it on the base layer, or will it happen on the applications on top? It's similar to the internet, where the majority of the value is accrued on the top value. And potentially we could see Ethereum, Solana being commoditized as well. Doesn't mean they will be used globally. They will be leveraged globally, and in the long run, they will accrue value. However, it's really hard to put a number on that in the short term.
But how should investors think about that? And I'll just go back to the 21shares ETF lineup. If you have an Ether ETF or Solana ETF, do investors just need to look at this on a much longer time scale? And you mentioned that they should be viewed much more as early stage VC investments. I'm just trying to, for a longer term investor, trying to get their head around, okay, why should I allocate to this in a portfolio? What is that rationale?
Yeah, no, absolutely. I mean, it is the best proxy to get exposure to these trends like stablecoins and tokenization. What I'm saying is that the price might not reflect the current adoption. So once again, it requires a bit of zooming out, a bit of patience. Of course, when it comes to tokenization, we're still very much in the early innings. However, the more asset managers, the more financial institutions build on top of these platforms, or fintech companies integrate these network rails, in the long run, the price or the value will accrue to those platforms as well.
Yeah, I think I saw something where you said crypto in 2026 is akin to the internet in 2003 or something like that. Is that right? Okay.
Exactly. No, there's a lot going on. And maybe to point out the last vertical, which is decentralized finance. So decentralized finance is basically any financial service, but cutting out the middleman. So when you send a transaction or when you trade a stock, you usually have a market maker, there's clearing, there's settlement, there's a lot of steps in between that are being cut out by these platforms. One interesting case, just to put that in perspective, and Nate, I don't know if you heard about this, is Hyperliquid.
Sure.
Yeah, so Hyperliquid is basically a trading platform, a trading venue. You can think about it like the CME, for instance, where you can trade futures, but on the blockchain. And Hyperliquid, it's insane the amount of revenue it's generating. Over the last year, it did over 1.1 billion in transaction fees compared to the CME, which did around 5 billion. So obviously the CME accrued more value, but they also have over 3.7K employees, while on the Hyperliquid protocol, only 11 people are working, which means if you trim it down in regards to capital efficiency or revenue per employee, Hyperliquid is just miles ahead when it comes to that. So
and I think,
what I mean,
go ahead. Yeah,
go ahead. No, what I
mean,
by that,
I think that's a perfect example of what you were saying earlier, and that you have to look at projects that are actually generating cash and have value, and there's going to be some big winners and not.
That's it. Exactly. And that's why I would say when it comes to the altcoins, yeah, investors got to look closely, look at the fundamentals, look at the traction, the revenue, the cash flow. There will be winners. I expect to see some rallies, but more selective. While the broader altcoin market, there will be a lot of altcoins that won't be able to recover from this downturn.
Let me ask you this, going back to some of the narratives that were in the market overall, when I think about broader crypto prices, you mentioned the institutional adoption narrative, and we clearly saw that with the launch of the spot Bitcoin ETFs in 2024. Then that was followed by the spot Ether ETFs, and then we saw a number of crypto products come to market last year. My question is, do you have any concerns that this recent downturn will slow institutional adoption at all, or whether we're talking about the ETFs themselves or just crypto overall? And before you answer that, I want to give you a couple of stats, which you're probably intimately familiar with, but I thought these were interesting. So Bloomberg had a stat the other day that the average price ETF holders have paid for Ether was around 3,500. And of course, Ether, last I checked, was trading around 2,000. And it's a very similar situation if you look at spot Bitcoin ETFs, where the average buyer is underwater. And so again, my question is, do you think this will give institutional investors pause at all? Is that going to slow institutional adoption, or is this just a bump in the road?
I don't think it will slow it down. Institutions usually don't allocate based on a 6 months performance. What they really care about is regulation, liquidity, and portfolio construction. So obviously every new asset class goes through a period where early investors are underwater. I think that's normal. We saw the same with emerging markets, tech stocks after the internet boom, or even gold ETFs. So if anything, I would say they are getting used to the volatility. It forces institutions to learn how these assets behave in different environments. But all of this actually supports long-term adoption.
Okay, so looking ahead, you mentioned long-term adoption. What do you think is most important for Bitcoin and crypto? What could be some key positive catalysts that turn around the recent negative performance that we've seen?
I would say the biggest driver for crypto remains liquidity. So liquidity and sentiment, obviously. So I would say when real yields come down, and financial conditions finally ease, that's when crypto really tends to respond very quickly. So I would say liquidity is the most important thing. So of course we're expecting rate cuts. Let's see with the new Fed chair if we get some balance sheet expansion as well. But overall, I think liquidity for the market is the most important thing, and where that liquidity goes. On top of that, obviously, there's some regulatory clarity. I would say deeper ETF integration. We've seen this a lot with Bank of America, Vanguard opening the pipes for traditional investors. And overall, just more tokenization, stablecoin integrations. All of this, in my opinion, is important. But ultimately, crypto is still one of the poorest expressions of global liquidity. And I think when that liquidity turns, crypto usually leads.
Talk a little bit more about the regulatory clarity. And obviously, I'm based here in the U.S. Crypto is a global asset, but U.S. investors tend to think only about their local jurisdiction when it comes to regulation. How important is something like the Clarity Act that's on the table?
So first of all, of course, the U.S. is the heavyweight, and it usually leads the pack. And I would say the Clarity Act is very, very important for the long run. I don't see it as a major catalyst that could turn everything around when it comes to price. What I mean by that is just when we are in a bear trend like we are right now, and just the macro conditions are bad. Even good news like that usually don't lead to a turnaround in price. So what I would say, it would be a good catalyst during a bull market when prices trend higher. I think it could accelerate everything. But other than that, I have that opposing view that people put too much expectations on the Clarity Act.
Okay, so you offered a few potential positive catalysts. I don't want to end on a negative note here, but since we are in the midst of a huge drawdown across crypto, is there anything that you see that could exacerbate the current drawdown or turn things even further negative? And by the way, neither of us have a crystal ball. This isn't investment advice. I'm just trying to think about the potential positive and negative catalysts that are out there. Anything on the negative side that would cause further alarm for you?
I would say a major pullback in the stock market. As you can see here, and that's how you can see we're clearly in a bear market. Any good news don't really help the price, but if anything bad happens, we go down even further. And I would say any weakness or any major pullback in the stock market, in the S&P, in the NASDAQ, would hurt crypto quite a bit. And that potentially could lead us down to, what I said, the realized price, the 200-day moving average.
Is part of that just because of some of the leverage in the system that if, say, stocks or other assets go down, perhaps one of the first things that big investors look to sell is crypto? I think it's the same with gold and those assets. Is that why, if you were to boil it down?
Yeah, absolutely. Crypto usually reacts much faster. And when those conditions tighten, usually crypto is very sensitive and turns quite quickly. But Nate, overall, I don't want to end up on a negative note. Overall, I'm long-term bullish. Once again, the value proposition, especially for Bitcoin, Nothing has changed. Once again, I do believe I always say that the sun comes after the rain. We're going through a short-term hard period, but it doesn't change the investment case for a digital emerging store of value like Bitcoin. And when it comes to the broader altcoin market, as we mentioned, there are a lot of cutting edge technologies. There's a lot of innovation happening. We're seeing a lot of integrations with traditional finance. It just takes time until it materializes and it's being reflected in the price.
Well, that is the perfect spot to end on. We are going to end on a positive note. Adrian, excellent insight this week. I really appreciate you taking everybody through where the crypto markets are currently at and perhaps where they're heading moving forward. Really enjoy the conversation. Thank you for joining me.
Likewise. Thank you, Nate. Thanks a lot.
That was Adrian Fritz, Chief Investment Strategist at 21shares. Hope you enjoyed this episode of Crypto Prime. As always, you can stay up to date on all of my latest guests by visiting CryptoPrimePodcast.com. Thank you for joining me.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. Some guests appearing on this program may also be financial sponsors of Crypto Prime. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.